as always, let's talk about the market action first up. It was a strong day for bulls on Dalal Street as key indices traded in the green, closing the session with fairly decent gains. So Nifty stood as the clear outperformer with a sharp rally of about 128 points. Let's pull that up for you. It closed above 11,000. Now Sensex also saw very sharp gains, buying to close the trade with gains of about 358 points. Bank stocks also gained ahead of the Reserve Bank policy tomorrow. The Midcap index recovered by 200 points and closed with minor gains. Surbhi Upadhyay joins in now with the key highlights. Surbhi, bulls coming back in control, or could this be a one-off?
Well, it's been long and painful. It's taken us over 4 months to come back to this level of 11,000 on the index. It's been a slow grind. We've seen several casualties, lots of stocks losing a huge amount of value as well, and a lot of mid-cap accidents as well. And that's the 4 months journey. Let me talk about today. Today was a good day. There's no taking away from that because there was widespread participation. So on the index, today you won't find us talking constantly about the same 4 or 5 stocks that are taking the index higher. Today there was lots of participation coming in from various sectors, various stocks. There's some hope obviously building in of a rate cut from the new governor. Let's see if that comes through or not. But the other facet of trade was that the mid-cap underperformance also diminished today, at least to an extent. There was a good recovery on the mid-cap index and we had some high flyers there as well. So let me quickly boil it down to stocks. If you're talking about the Nifty, then Tech Mahindra really stands out, rank outperformer, great numbers for the third quarter and an 8% up move today. Z, in fact, some of the other SL Group stocks as well were quite active, and there was some buying that was witnessed here. Cipla reacted well to those numbers that came through. Other Nifty gainers included a couple of metal names. Tata Steel, for instance, was very, very active. Hindalco did well. Bajaj Finance, the leader, is really moving higher and approaching those levels of 3,000 once again after what's been a blowout quarter for this company as well. Auto names have been in recovery mode over the last couple of sessions, and that trend continued today. So Eicher, names like Maruti, Bajaj Auto, they were all on the higher side. Banks were slightly mixed. You had some gainers like the ICICI and the SBI duo, but then you had some weakness on names like Axis, IndusInd and Kotak Mahindra Bank as well. Speaking of losers, let me just quickly round this up. Titan is seeing some profit taking after its massive rally in the last couple of weeks. Adani Ports and Dr. Reddy's were the other two main stocks in negative territory. Now let me come to mid-caps. Action is very earnings driven, very earnings specific. But as I said, at least there was no major casualty today. SRF, Dish TV, these were some of the stocks on the upside. The ADAG group was split down the middle. So you had Reliance Nippon rallying 16 to 17%. Adani Power also moving higher post the numbers. But on the losing side, look at Reliance Infra. That's a result disappointment. Of course, concerns about over leverage, etc. 30% down on that stock. Tata Chemicals and IDBI Bank were the other key mid-cap losers of the day. Coming back to the central point, 11,000 is here, but sustainability is the key. We'll have to see how the market reacts, particularly if there is no hike, and whether it can digest that and still keep on building this momentum.
Okay, we let it go at that. Surbhi, thanks for joining in with that. Now, let's talk about the big story that we'll be watching in the next 24 hours. The Reserve Bank will be announcing the 6th bi-monthly monetary policy statement tomorrow. The MPC meeting entered a second day today, and this will be Governor Shaktikanta Das's first policy announcement after he took charge in December. The last 3 policies have maintained status quo on the repo rate. Will it be any different this time around? Well, a majority doesn't seem to think so, according to a CNBC TV 18 poll. Let's bring in Ritu Singh, who did that poll. Ritu, take us through the fine print. What exactly is the street expecting this time?
Well, logic demands that when you have a budget which promises to boost consumption, the Reserve Bank of India should go into a tightening mode. But that is not something that we should see from the Reserve Bank of India, given how benign inflation has been in the last few months. So 90% of the respondents that we actually polled believe that it will be a status quo policy, as the RBI will refrain from a cut also this time around, given some of the fiscal pressures and the fact that crude prices have been inching up. But there is 100% of the economists that we polled expect a change in the stance of the RBI from calibrated tightening to at least neutral, which will then take them to further rate cuts. And 50% expect at least one, 25 basis point rate cut in this entire calendar year, and another 50% expect 2 rate cuts of 25 basis points each until December. No action is expected as far as the CRR tool is concerned. Economists don't really expect RBI to use this just yet. On the macro parameters, GDP forecast is largely expected to remain unchanged by 60% of those we polled at 7.4% for this financial year. And for the first half of next year, where RBI pegged it at 7.5%, that, many expect will be lowered, given that the government itself is also now projecting a 7.5% growth for FY20. And the first half is typically expected to be slightly slower, and therefore that revision is expected. Now, on the CPI front, there have been 6 revisions in the last 1 year from RBI. This time around, the majority expected to remain unchanged, at least as far as the second half projection for this financial year is concerned. For the first half of next year, 80% are expecting that will also be left unchanged as the RBI, watches for more data that will emerge. The tone of the policy, of course, now, that inflation has been below about 2.19% in the last reading, below 4% for several months in a row. They do expect RBI to sound more dovish, but yes, overall, it'll be an important statement to watch out for also, because it is Shakti Kanta Das's maiden policy.
Okay, Ritu, we'll leave it at that. But take a look at the flashes on your screens. The RBI board meeting, which was scheduled for the 9th of February, has now been deferred to the 18th of February. The meeting was supposed to decide on the interim dividend. So that has been now pushed to 18th, and we'll get some clarity on what dividend RBI is planning only then. Now, here's the big story from the media and telecom space. The Telecom Regulatory Authority remains optimistic about its new broadcast tariff regime that kicked in from the 1st of this month. We learned that so far, 30 to 40% of DTH subscribers have migrated to the new plan. TRI Chairman R.S. Sharma, however, feels that the progress so far has been satisfactory. That's not all. He has also quashed a CRISIL report that claims that post the rollout of the new regime, monthly television bill for viewers who opt for the top 10 channels may go up by 25%. So how exactly will the math work, and how is the TRAI chief confident? Farah Bakwala Vora has been tracking this space very closely, and she's here with the details. Farah, how has the progress been so far? And, also help us put this into perspective. By how much has the bills for individual payers gone up?
Well, first up, it's been a week since we've entered this new system, which kicked in on the 1st of February, which now allows consumers to pick the channels that they want to watch either on an a la carte basis or as part of a package, and then only pay for that. Now, when I spoke to my sources earlier, what they've been telling me is that subscribers are rapidly, in fact, moving to this new system. DTH operators have been able to fully migrate 30 to 40% of their subscriber base, and even as we speak, 10 lakh subscribers each day are migrating to the system. At the MSO level, which is the multi-system operator level, we're seeing that 20 to 30% of their subscriber base have completely moved to the new system, and 5 to 7 lakh consumers each day are opting for the new system by making their choices very clear. Now, what I've also picked up is that they expect, service operators are expecting that by mid-February, somewhere around the 14th of February, they will be able to complete the entire migration to the new system. Now, coming to the other issue of cable bills, which is a big issue. It's a big bone of contention and a big issue of discussion as well. There was a CRISIL report earlier which stated that cable bills would go up by 25% if consumers should opt for the top 10 channels. That was a widely circulated report, and in fact, that became the point of discussion today at a press conference which was called by R.S. Sharma. He put out data by Indecent Media, which went on to state that ARPUs, in fact, have come down under the new system. He presented that data and, in fact, even went on to say that under the new system in metros, there will be a reduction of 10 to 15%, and in non-metros, anywhere between 5 to 10%. So listen in to what R.S. Sharma had to say at that press conference.
CRISIL has given this report, and we appreciate the professionalism, and we know that they are a highly professional body. But I think in this particular case, their analysis is not based on correct inputs and assumptions. If you begin with the wrong assumptions or unrealistic assumptions, you are bound to get the results. It's garbage in, garbage out. So if you put in something wrong in the analysis and the part, and the result outcome is also not going to be correct. In Mumbai, the average pre-NTO, pre-new tariff order, was 325 rupees ARPU, which was basically a consumer was on an average paying 325 rupees in Mumbai. Now, post ARPU, those people who have selected this, their consumer price is 271 rupees. In Delhi, it was 303 ARPU, It is now 265.
Okay, so that is a bit of the rationale, but the reports are still out, or the decision is still out on what exactly is the price increase. But yes, that is something that has affected media stocks across the board. Let's get you an exclusive now. IDBI Bank has initiated the process to exit its life insurance joint venture. Sources say private banks are keen on acquiring the 48% held by IDBI Bank in IDBI Federal Life Insurance. Yash is here with more details. Yash, of course, it's very early to understand exactly who the banks are, but help us understand who the prospective buyers could be. What are the valuations for the stake held by the bank?
So Kritika, to start with and to be precise on the date, Jan 22nd was the date when the board of IDBI Bank approved a resumption when it comes to the divestment process in terms of the stake which it holds in the life insurance JV, which is IDBI Federal Life Insurance. Now, as far as progress on that front is concerned, what we are given to understand from our sources is that IDBI Bank has already started conversations and discussions when it comes to interested buyers, when it comes to its 48% stake in IDBI Federal Life Insurance. These buyers, which we are given to understand, are some of the private leading banks as far as the entire banking system is concerned. In terms of additional information, what we know is that these private banks do not have a life insurance company or a life insurance JV and are essentially looking at a brownfield entry when it comes to the entire life insurance space. As you also asked about the valuation, what we're given to understand is likely to be between 3,000 to 3,500 crore, which is again on pure basis about 1.7 to 2 times price to embedded value. But that valuation has seen a sharp correction when it comes to the last time when IDBI had come out in the market to sell its stake in IDBI Federal Life Insurance. At that time, the valuation was around 6,500 crore, so almost halved as far as the new valuation is concerned. This is one part of the story. The second part, of course, what we are given to understand is that IDBI Bank is also speaking to its foreign partner, which is Belgian insurance company Aegis Insurance, to raise its stake and dial up its stake as far as the life insurance JV is concerned.
Okay, Yash, we'll leave it at that. Thank you so much for joining in with that. That stock, of course, was up at the back of that exclusive story. Get your CNBC TV 18 special story. Flipkart CEO Kalyan Krishnamurthy has denied the reports that Walmart is looking to exit the e-commerce firm. In an internal communication to Flipkart employees, Krishnamurthy said that Walmart remains committed to India and is unfazed with any short-term hurdles. Now remember, a report by Morgan Stanley had claimed that Walmart may look at exiting India as the Indian e-commerce market is becoming more complicated. Priya Sheth is here with the details. Priya, tell us more about this development. A lot went into this deal going through. So what exactly have Flipkart CEO's words been to reassure employees that the deal is not being called off now?
Well, Flipkart CEO Kalyan Krishnamurthy has written to employees with regards to the Morgan Stanley report. Do remember that brokerage report really said that Walmart may look at exiting India or exiting Flipkart in light of the new regulations with regards to FDI and e-commerce. Now, do remember that these new regulations with regards to FDI and e-commerce essentially tighten the noose around several of the online giants, and they had been opposing these and asking for sort of extension as far as these regulations are concerned. But essentially what Kalyan Krishnamurthy has told employees is that Walmart remains extremely confident about the potential of the Indian market. He has reiterated the commitment that Walmart has as far as India as a geography is concerned, and he's confident about the way forward as far as the Indian market goes. They've taken a long-term view on opportunities and they are unfazed with short-term hurdles, is what he essentially told employees. Because do remember that there has been concern that Walmart may look at exiting India in light of these new regulations. Of course, Flipkart CEO also said that they will continue to work closely with customers, sellers as well as partners in the broad economy. So putting a rest to a lot of uncertainty that came out following the Morgan Stanley report.
Okay, fair enough, Priya. We'll leave it at that. So for now, Flipkart is unfazed by the Morgan Stanley report, or at least the changes and the tightening in the regulatory sector for FDI. On to an exclusive. NTPC, India's largest energy conglomerate, is looking at expanding globally and is planning to acquire assets outside India. The company is currently exploring global markets and looking at gas, thermal and renewable projects. Remember, NTPC currently has an installed capacity of 53 gigawatts in India. They plan to become a 130 gigawatt company by 2032. Anshu Sharma is here with details. Anshu, what are you picking up from your sources?
as CNBC TV18 reported that NTPC will look at growth via brownfield projects in India, now we learn that NTPC is looking at expanding its global footprint. We understand that NTPC is looking for solar power project in Africa, which could be about 1,000 megawatt under the International Solar Alliance. Now, this International Solar Alliance is something which was pushed by India to bring in countries to boost renewable energy in those specific countries. Now, we also understand that NTPC is looking for gas-based projects in Gulf countries, and in Morocco specifically, it is looking at hydro, coal and gas-based power projects. It is also looking at coal-based power projects in Oman, consultancy business in UAE, and some of the other countries where NTPC is looking to expand are Myanmar, Vietnam and other Gulf regions. Now, we wrote to NTPC with regards to their global expansion. NTPC has said that yes, they are looking at expanding projects in these countries of Morocco, UAE, other Gulf countries, Myanmar, Vietnam, but at this stage they cannot specify the quantum of capacity that they are looking at. Back to you.
Okay, Anshu, thanks for that. Now let's move over to the social networking area. With less than 3 months to go for the general elections, a parliamentary panel has summoned officials of Twitter in India over allegations of bias against right-wing accountants. The complaints of political bias have been aired by several BJP and right-wing social media users. In fact, in the United States, Twitter CEO Jack Dorsey, along with other major social media CEOs, deposed before a panel of lawmakers over allegations of bias against the right wing. A big twist in the Sabrimala case: the Travancore Devaswamy board, which manages the temple, has made a U-turn. The board is now backing the entry of the women of all ages into the shrine and wants the Supreme Court to junk the review petitions. Ashmit Kumar is here with details. Ashmit, why this change of heart now?
Well, there is clearly a change of heart. There has been a clear U-turn made by the Trivandrum Devaswamy board. I'll come to that in just a bit. But first, of course, the big takeaway: the Supreme Court has reserved its judgment in a batch of 54 petitions that had sought to review the Sabrimala verdict. Now, some of the arguments that had been raised in court essentially was that the people of Kerala have not accepted the verdict, that was evident from the widespread violence and social unrest, that this is not a case of gender-based untouchability, but rather is out of reverence, is out of respect for the nature of the deity in place at the Sabrimala temple, that the test of whether or not a practice is crucial to a religion should be left to the community itself, and that it's a matter of faith, which is not a space for public law, for constitutional morality. Now, this is where things got interesting. The Travancore Devaswamy board reversed its position, said that they have revised their stance. They believe that equality is the basic tenet of our constitution, that women cannot be discriminated against in such a fashion, and that they have accepted, they have gracefully accepted, that's the word they used, the judgment of the 2018 judgment of the Supreme Court to throw the doors open of the Sabrimala temple to women and men of all ages. So with that, the Apex Court has reserved its verdict. The clarity is awaited. Justice Gogoi, we understand, will have the final word going forward. Of course, it's a 5-judge bench, so that bench rather will have the final say in whether or not Sabrimala will be thrown open to women and men of all ages. Back to you.
Okay, Ashmit, thanks for joining in with those details. Now, Robert Vadra is appearing before the Enforcement Directorate in connection with a money laundering case which relates to alleged possession of illegal foreign assets. A Delhi court had earlier granted Vadra interim bail in this case and asked him to appear in person today. Congress President Rahul Gandhi's brother-in-law is allegedly accused of money laundering in the purchase of London-based property worth £1.9 million. Remember, Vadra has claimed that he is being falsely prosecuted. Well, with that, it's time to wrap up this edition of After the Bell. Thank you for watching. Stay tuned to CNBC TV 18. Markets Today Talk Back gets you all the market action on the other side of this short break and gets you trade ready for tomorrow. Stay tuned.